All right, so today's presentation is on the differences and similarities between day trading and swing trading. It'll be about half an hour, maybe a little longer. I'm going to go through some of the basics, some of the things that you may have seen me discuss in recent webinars. Just because they are the basics, we need to cover them off. And then I'm going to talk a little bit about what the differences are between day trading and swing trading and why a person would choose one over the other. And there's a few things that you have to consider. It's not only a question of time, but there's some other factors as well. I'll show you a few examples. I'll walk you through some of the processes that I use for both, and then at the end I'll let you know how you can take advantage of some of the educational material that I've created and some of the indicators that I've created, as well as how I use stock scores. All right, so let's get on to it then. Introduction, I'll talk a little bit about my background in trading. I'll describe my approach, my concept for active trading, and also the concept of reward for risk, because it's important when you're trying to understand your performance and how I measure performance. That's when I'll then get into the differences between day and swing trading. I'll show you my processes for finding trades, both for day and swing trading. I'll talk a little bit about the different components of a trading approach, and then how to become a trader using the stock scores approach. So a little bit on me. I started trading when I was 19 years old, so that's now 25 years ago. I started with $3,000 in capital, some of which I borrowed off of my credit card, and I've since made a living off of the market. About the year 2000, I created the tools that you see on stockscores.com. Now they've been evolving over the years, but the first rendition of stockscores.com came out in 2000, and my basic aim there was to create the tools that I needed to identify opportunities. I was spending a lot of time to do the work, and of course a computer can make this all a lot easier. So I built some tools in stockscores.com, which I'll show you today, which just allow me to go through thousands of stocks in a few seconds, as opposed to taking days to do the work. In 2001, I developed an educational approach around those tools and around my methodology. And then earlier this year, I launched a book called The Mindless Investor, which you can order from our website, stockscores.com, or from Amazon. And a lot of the concepts I talk about today are covered off in that book as well. All right. So let's first of all talk about my concept for active trading. Most stocks, most of the time, are not worth trading. And the reason is most stocks, most of the time, trade in their normal fashion. They trade with a fairly strong correlation to the overall market, and they're not necessarily beating the market, either beating what the market earns or beating what that stock should earn on a risk-adjusted basis. And so I would say 95% of the time, stocks are not worth trading because they're not moving quickly. They're not hot. You know, today there was a stock that was hot, and that made it worth trading today. But tomorrow I won't trade that stock. For the last week, it's been hot to trade the VIX or the ETFs around the VIX. But a week ago, I wasn't trading the VXX ETF or any of the derivatives of the VIX. So I only trade things when they are in a fast-moving state, because I want to get the most bang for my dollar. Now the key to finding these fast-moving stocks, whether you want to day trade them or swing trade them or even position trade them, the concepts are all the same. We always focus on abnormal activity. However, there is more to trading than just buying the right stock at the right time. In fact, I think picking the right stock and having the right entry point is actually secondary to being successful. So much of trading success is about managing risk and managing reward. It's imperative that you preserve your capital, that you also stick with a winning trade long enough to make enough profit to pay for the inevitable losers. I am not right all of the time. In fact, there are some weeks where I'm wrong more than I'm right, but I can make money consistently because I don't take big losses, and I have big winners that come along which pay for all the losers and provide me with my profit. Many investors and traders, when they are starting out, are really focused on the stock that they're in currently, and they don't look at the big picture. They don't say, I'm going to apply these rules and buy and sell 100 stocks, recognizing that sometimes I'll lose, sometimes I'll make, and when I make a profit, those profits have to pay for the losses. What people do, because we are all sort of victims of our emotions, is we tend to sell our winners too early and tend to hang on to our losers for far too long. And that causes us to take bigger losses and have relatively smaller profits. We have to take the emotion out of it, and that's why it's important to have a solid trading plan. So back to my basic approach, most fast-moving stocks that are beating the market, start their trends with abnormal price and abnormal volume behavior. When I show you my processes later in this presentation, you will see that my focus is always on abnormal activity. And although our focus today is on day trading and swing trading, I have that same focus on abnormal activity when I position trade as well. So if I buy a stock like Alcoa, which I bought a number of months ago, as a stock that I think will beat the market in the months ahead, what triggered me to buy that a few months ago was the abnormal trading activity that it was showing. What makes me want to buy the VIX last week was because it started trading abnormally. Now, I will tell you that just about all stocks that beat the market start their strong market-beating trends with abnormal activity. However, not all abnormal activity leads to market-beating trends. So if we just sort of pause and think about the logic here, if most stocks that beat the market start with abnormal activity, but not all abnormal activity leads to market-beating moves, then we need to have a way to qualify abnormal activity so that we can really focus in on the trades with the best potential. And that's where it comes down to reading charts and understanding some simple concepts like support, resistance, optimism, pessimism, price volatility. These are all the things that I teach in my foundation course, and they really are pretty simple. You don't have to get into the complex methods of analysis. These are simple things. And as a trader who day trades, swing trades, and position trades, my analysis toolbox has 6 things in it, and that's really all that I need to do. And after that, it's all about managing risk effectively and managing reward effectively. So what do I mean when I say abnormal activity? Well, here is a 13-minute chart going back 15 days of a company listed on the NASDAQ stock exchange called Teneo Corp. I don't even know if I'm pronouncing that right. This is a Chinese travel company. They do organized trips in China, and you book it online. It's that sort of a service. Now, what caught my attention was this big spike in volume and big spike in price back on July 28th. That was on the opening 13-minute bar of the trading day back on July 28th. You can see that the volume on that opening candle was higher than any other on this chart, and the price action stands out relative to anything before it. So we can see visually that it was trading abnormally. Statistically, mathematically, we can also define that, and that's what the computers that we have at Stock Scores look for, is they look for statistically significant abnormal trading activity. And I get up every day and look for that, and on this particular day I bought TOUR. I actually bought it about there, a little under 1950, and I had my stop here, and since that time the stock has been moving higher. Now keep in mind that this stock is moving higher at a time when the market has been doing the exact opposite. So this stock is beating the market quite handily simply by going up when most of the market is going down. So that's a typical swing trade for me, and I'll show you the process I use to find these later on. There's also day trades that I like to do, and when I'm day trading, I look at a different chart time frame. That last chart was a 15-day, 13-minute chart. The chart that you now see on screen is a stock that was moving abnormally today, Mueller Water Products. MWA is the symbol. And you can see that for the 5th of August today, the volume traded was significantly higher than it was yesterday. And the price action is very abnormal. This stock on Friday, or pardon me, yesterday, Monday, traded in a range between 770 and 780, and today it's been between 820 and $9. So a really big range, and with a big gap up in price on the open this morning. Each one of the bars on this chart represents 2 minutes of trading. And so you can see that there was a lot of volatility, a lot of action in this stock, again on a day when the overall market sold off pretty sharply. All right, so as a trader, I am looking for abnormal activity. Whether it's a day trade, a swing trade, or even a position trade, I'm always focused on the abnormal activity. Now, the next concept I want to talk about is this idea of reward for risk, because I measure my performance on my trades in terms of the reward I earn for the risk I take. The risk of the trade is the difference between the entry and the stop loss price. So if I'm buying a stock today at $10 and my stop loss is at $9, I've got a risk of $1. If that stock ultimately goes up to $15, I will have earned a reward of $5 because I bought at 10 and I sold at 15. My stop loss was at 9, so I've earned a reward for risk of 5 to 1. If I risked $100 on the trade, in this example, I would have bought 100 shares because I was buying at 10, my stop was at 9, my risk per share was $1, and if I didn't want to lose more than $100, I would buy 100 shares, since 100 shares times $1 a share is a total risk of $100. And in this case, because the stock goes up to 15, I made a $500 profit, earning me a reward for risk of 5. Pretty simple concept, but very important when you are trading. Most people will judge their performance based on how much they make, but without some consideration of how much you risked, you run into the danger of not enjoying those big profits that pay for losers. You know, it is foolish to say that, hey, I'm proud of myself, I made $1,000 on a trade, if you actually risked $3,000, because you took a position so large that if the trade hadn't worked for you, you would have taken a very big loss. All right? Now, when I do stops, it depends on my strategy. Usually when I day trade, I have a hard stop. When I swing trade, I have a stop that looks for a close below my stop loss point, and that is sort of a manually executed trade. I get into the details of that in my course material, but you don't always want to use a hard stop loss order because most stocks aren't liquid enough to absorb the liquidity problem that comes with having to use stop losses. We don't want stocks that can, you know, sort of hit that stop and then come right back up again and keep up moving up. And that often can happen because of liquidity factor. So, you know, if I'm trading a stock that trades 40,000 times a day, I don't mind using hard stops. But when I'm trading a stock that might only trade 1,000 times a day, because there can be a wider spread between the bid and the ask, because there can be little air pockets in the market, if there's a large seller, I don't want to use that hard stop concept. I want to instead use what I call a stop on close concept. All right, so now let's go through and talk a little bit about the differences between day and swing trading. So when I day trade, for me that means I'm out by the end of the day. And because it's a shorter time frame, I also use a shorter time frame of analysis. Generally speaking, when I am day trading, I will use a 2-minute chart. And when I'm swing trading, I'll use either a 13-minute or a 30-minute. And I apologize, it's a little bit hard to write with this mouse here, but that's day and this is swing. Okay, so I'm going to just bring a chart up here for you. Just bear with me for a second. I will bring this screen down to where you see it. So if I want a day trade, I'm going to look at a 2-minute chart. So I can pull up Microsoft, for example. And what you can see right now is I'm looking at a daily chart. Well, if I click on the 2-day link at the top, that makes it a 2-day 2-minute chart. If I click on 15-day, that makes it a 15-day 60-minute chart. But I could click on 13-minute and now I see a 13-minute chart going back 15 days. So it really comes down to the time frame of analysis is different when you are either day trading or swing trading. The second thing that's different is just the time dedication. Swing trading, because you're looking at 13 or 30-minute charts, you really only have to make a trading decision every 13 or 30 minutes. Whereas a day trader is making decisions based on the 2-minute chart, they got to be a little bit more in tune with what's going on as the market unfolds throughout the day. So I think that day trading is a full-time occupation, whereas swing trading you can do a little bit more passively. I will often, I write books and I do videos and all this kind of stuff. I run stocks course. So often I'll do that while I'm swing trading because I can get the computer to do most of the work, and every 13 minutes or so I just run a quick market scan and a process that I'll show you in a moment to see if there's anything that's doing what I need it to do. But day trading requires a lot more focus. So if you don't have the ability to watch the market really closely for the day, then I don't recommend day trading. If you can, sort of passively keep an eye on the market throughout the trading day, then swing trading is more for you. Now, if you have no time to watch the market through the day, then I recommend more of a position trading approach where you're going to hold stocks for weeks or months. The holding time frame for swing trading is typically for me less than 2 weeks, anywhere from 2 days to 2 weeks, and usually 4 or 5 days. So I'll buy a stock, 3 or 4 days later I'll sell it. That kind of a time frame. So time dedication, day trading takes more time. But it's important to realize that if you're day trading, you don't have to do it every day because you are in cash at the end of each day. So I have a number of students that can trade 2 or 3 times a week, and so they'll day trade 2 or 3 days a week, and then the other 2 days they go to their job or whatever they have that fills their time those days. So there is still flexibility when you're day trading because, again, at the end of the day you are in cash and you can leave the market for 2 days and not worry about it. And so it does have some freedom there. All right, let's talk a little bit about risk. When we are trading, whether we are day, swing, or position trading, we always plan our losses. So if a stock was building a good pattern and it breaks out, whether that's a 2-minute or 13-minute or a daily chart, our entry is here and our exit is down there, and we're going to take that loss if the stock falls down to that level. But when you're day trading, because you're watching the market all day and there's really no price gaps during the day, if you have the discipline to take the exit when you hit your stop, then you're going to always get out pretty close to this. But imagine if you were a position trader and you hold a stock and it does this, and then overnight the company announces really negative news and the stock opens way down here. Well, you may have bought it here with a plan to sell at your stop loss there, but because you held overnight, there is that risk of a gap down on the open. And so riskiness, from a risk standpoint, day trading is actually less risky than swing or position trading because the gap risk is really not there. Very, very occasionally you will have a stock get halted during the trading day and then gap down when it starts trading again. There was one of those a few weeks ago, one of these scam stocks that went up so fast that the SEC halted it. But generally speaking, that's very rare that happens. So that's why I often will tell people that day trading is less risky than swing trading. With that said, there is also a lot more emotion in day trading, and that in itself is risky. So if you don't have the ability to be disciplined, if you get caught up in the fast-moving markets that we sometimes have and get sort of sucked into the emotion that comes with that, then day trading can be very risky for you. Day trading requires discipline, requires emotional control, and if you don't have those things, then you're better to choose a longer-term type of trading like swing or position trading because it's not as emotionally charged as day trading is. From a skill standpoint, my rules for day trading or swing trading are very similar. So it's not more difficult to understand a day trading concept than it is to understand a swing trading concept. However, when you day trade, you're making decisions every 2 minutes. That means you have to make pretty fast decisions. When you're swing trading, you've got a little bit more time to think about it. When you're position trading, you can think about it all night. You can have a glass of wine and dinner before you make your trading decision. You have the luxury of time the longer the time frame that you trade. So day trading does require more skill simply because you have to take those skills that are required for any style of trading and make them automatic. You don't want to have to think about things. So when I'm day trading, I've got my little formulas for when I buy and when I sell, but I don't have more than a few seconds, maybe 10 seconds to make a decision. I got to be fast. And you can only do that by practicing. So I recommend for people that have never traded before to start with position or swing trading, get good at it, make those decisions instinctual, so that when you come to day trading, you're not sitting there kind of going, okay, does this fit the rules? Yes, no, and having to go through that process. You have to really have a good sense of the rules and applying them. From a profitability standpoint, there's two aspects to profitability. One is whether a strategy works well or not. And right now, I would say that my swing trading strategies are working better than my day trading strategies. And that's largely because we're in a summer market, volumes are low, you just need more time for these stocks to move. And so in my own trading, I'm pretty focused on swing trading right now because that's what I find is working the best. With that said, day trading can be more profitable simply because you're turning your capital over more often. So if you have two strategies that have the same expected value, one's a day trading strategy and one's a swing trading strategy, you're going to make more with your day trading strategy because you can turn your capital over more often. You're going to make more trades when you're day trading, so you're just being more active. The same can be said of swing trading over position trading. Your money is moving more actively when you're swing trading than when you are position trading, and therefore you can just have a higher amount of profitability. So there's two aspects to the profitability question. Again, one is what is the profitability of the strategy? Right now, I think the swing trading strategies work better than day trading strategies. And the second is how often you can turn your capital over. And certainly day trading in a normal market would be better, but I think right now swing trading is winning through the summer market. And that really comes to the last point, which is market suitability. You want to always trade a strategy that's right for the market condition you have. We can't tell the market what to do. I've tried, it doesn't listen. So we have to instead do what the market tells us to do. This week, the market is in, and it really started last week, the market's in a profit-taking mode. So rather than do my normal swing trading strategies, I'm pretty focused on trading the VIX because that's what's suitable for the market right now. That doesn't happen very often. The market isn't in pullback mode very often, but it is right now. And so, for those of you that read my newsletter, you'll know on Wednesday I recommended trading the VIX. Thursday I myself bought it, and it's been a hot mover since. I think the VXX is up 11 or 12% since I jumped on it Thursday morning. So you got to go where the action is, and you got to trade the style that the market tells you to trade. Slow summer market, day trading doesn't work as well because you just don't have the action. Swing trading is working better. When you have the action, then you want to day trade because you can make a lot more money day trading when there's that real hot market action. All right. So let's now go through the processes that I use for finding trades. I'm going to start by using stockscores.com. I'm not here to really teach you my strategies today. I just want to give you a sense of the processes. People that want to learn my strategies, they can learn that from our educational products that we have, but I do want to show you the processes. So if I am swing trading using stock scores, I'm going to show you both the tools on stock scores and how I use TradeStation. So for the person who can look at the market maybe every half an hour or maybe only for the first hour or two of the trading day, I recommend using a strategy called the Simple Swing on stockscores.com. So you're a member of StockScores, you log in, you go down to the Market Scan tool, and you select the StockScores Simple Swing, which is right here, strategy. and it's going to bring up the settings, which are hard-coded into the Market Scan tool. The Market Scan tool allows me to filter in all these different criteria, looking for stocks that meet the basic criteria. Now, I do this scan, if I'm using stock scores, I do this scan every half an hour. So about half an hour after the market opens, maybe 35 minutes after it opens, I run my first scan, and I simply click on this button, and it gives me a list of the stocks that meet the basic criteria of what I'm looking for. Now, we're at the end of the day, so the number of results is already 73. If you did this morning at half an hour after the market opened, you would have had about 15. So as the day progresses, you get more opportunities because the market's moving along longer. Now let's look at the charts of these. So we're going to say select all. We're going to view these as a slideshow and just quickly go through the charts looking for the things that I've taught you to look for. Now, two things are required. One, you have to have the right kind of pattern on a daily chart, and the second is you have to have the right kind of pattern on an intraday chart. So as I go through these charts, I'm looking at the daily to see if they have the kind of pattern I want. Now this one's not bad. So if I like the daily, then what I do is I take a look at the 15-day, 30-minute, let's do the 10-day here, 10-day, 30-minute chart, looking for whether the pattern is there. Now in this case, it was okay, but not great. So I'm going to move on to the next one. When I see this one, again, I just click on the daily was good enough. Look at the intraday. Yeah, it was okay at 477. Might have wanted to buy it there, not sooner. Didn't really make a breakthrough resistance until about an hour and a half before the market closed. Sorry. And so 477 was okay. Closed the day at 497. So made 20 cents there, 5%. All right. So that's the process. Is you're taught what to look for in the chart. When you see it, then you assess the different time frames of the chart, looking for these patterns that I look for. Okay, here's Walter Energy. I was on the radio with Michael Campbell's Money Talks show on Saturday, and I talked about coal stocks on Saturday. I said coal stocks are something you want to watch coming on Monday, and here's one here that had a real big move on Monday and broke out from a decent chart pattern at 605, closed the day at 637. Okay, it's not rocket science. What I teach people to look for is pretty simple, but what gives us an edge is the tool that allows us to scan the entire market for these stocks. Now you can do this with Canadian stocks as well. I could do simple swing, and I could just change it to only look at all Canadian, and I'll just make another adjustment here, lower the number of trades down to 250, run the report, and there's 12 stocks to look at. Same process, look through the charts. I look at the daily first. If I like the daily, then I look at the shorter term intraday chart and decide whether there was a good opportunity there. Here is Petro 1 Energy. Good breakout on the opening 30-minute candle of the day at 37 cents. Closed the day at 44.5 cents. So that's a 20% gain from where you could have found the stock on the open this morning. All right. Now what I'm showing you here now is the gallery chart viewer. You notice I can go through a whole bunch of charts very quickly. And when I see something I like, I can blow it up. When I want to change the time frame, I can do that. And again, just blow it up, take a look, and see whether it has what I'm looking for. All right, so we cover all North American stocks. You get more opportunities in the U.S. market, of course, but often the opportunities that you get in the Canadian market have better follow-through because there's just so much more. Now, someone just asked me if this is being recorded. Yes, it is, and as long as we don't have a technical problem, which I don't suspect that we will, I will email out a video of this after the presentation. All right, so we're almost done, and if you want to go back and look at this stuff, then you'll be able to watch the video. All right, so that is the process. Let's jump back to the presentation here, and that's the process on stock scores. Now I'm going to show you the other tool that I use, and this is a tool that is good when you're more active, when you're going to watch the market more closely in real time, and you can just make your decisions quicker. And it's something called TradeStation. Now, TradeStation doesn't have anything to do with me. They're an American software company. I subscribe to it. It costs me $300 or $400 a month to subscribe to TradeStation. If you are in the U.S., you can have a brokerage account with TradeStation, in which case they'll give you the platform for free. People in Canada, you cannot have a brokerage account with TradeStation, so you have to subscribe to it. And as I said, It's $400 a month. My students get a $100 discount a month because I send them a lot of business, so they give me a bit of a discount. All right, so let me show you the process for swing trading in TradeStation. What I do every 13 minutes is I run a scan called gainers. I grab the stocks that are making gains, and I copy them all. I paste them into a window, and I'm going to filter them for liquidity. So you can see here there's 373 stocks that were making gains. I grab the more active of those and copy them, and I paste them into a screen where they look for something called action candles. So right now, hopefully you can tell that there's some changes happening on my page here. There's little alarms going off. That's because TradeStation is running a whole bunch of analytics on all of these stocks looking for something I call an action candle. Now I will show you what an action candle looks like in just a moment. It's just trying to update a lot of data here for me right now, so it'll take a moment to do this update. In fact, rather than wait, I think what I'll do is I'll just delete all this because I don't want to spend a lot of time waiting for this. So this stock that you see here on screen, I'll just bring up the chart here, bear with me. And I'm going to make this a 13-minute chart. All right, so I'll make this chart a little bit bigger. Whoops, sorry, grabbed the wrong corner. Okay, anywhere you see a pink dot on the chart, so there's a pink dot, there's a pink dot, that's something called an action candle. That's a 13-minute candle that made a statistically significant price gain with statistically significant volume. Now remember, my concept for trading is to find abnormal activity. And I do that by finding the statistically significant abnormal activity. All right, so let me show you a stock that I traded a couple weeks ago. And we're going to go back a ways here. Make this go back a little farther. All right, so let's go back to here. And hopefully you can all see the little pink dot right there. And you can also see one over here. So those were the moments, those 13-minute intervals when the stock made a statistically significant price gain with abnormal volume. It also moved from a good chart pattern. Now those of you that know a little bit about technical analysis will know that this is an ascending triangle pattern. I'll just draw some lines on here so you can sort of see it. It's more of a pennant pattern, I guess. And you had a breakout right here from that pattern. Now, if I had had that stock in front of me, I would have said, yeah, that's a buy. I know that's a good chart pattern. The problem is there's 15,000 stocks that trade in North America. How do I know which ones are making those good chart patterns at any one time? The only way that you know is if you're watching it. What TradeStation does is it looks for the abnormal activity using the process that I'm showing you. Now, when I see that, so I went and bought Royale on that moment, and my entry price was at 425. I don't remember my exact entry. It might have been a penny or two different. All right. And my stop loss was at the red line at around 410. Now, as that trade progressed, and you'll see here that in the days that came ahead of it, it moved up more and more. And what ultimately happened for me is I got out of that trade right here for a 4-to-1 reward for risk. Let me just get I've got a log here on my other screen that I can tell you what my exit was. It was, buy price was 424, sell price 480. So just as it was starting to break down through this floor right here. And so that gave me a reward for risk of 1, 2, 3, and almost 4. That means if I risked $1,000 on the trade, it made me about $3,800. All right, and that trade took 1 day, 2 day, 3. It was sold on the 4th day. Now, if you see what happened after that, the stock really has done pretty poorly since then. It's been dropping ever since. So I only owned the stock when it was hot, when it was in the news, or when there was something going on with the company, volume was abnormal, and it had good follow-through. Once the story's over and the stock starts to break down, I say, see you later, I'm out of there. I don't stick around these things. I have no devotion to stocks. So you know, if I had held until now, I'd be down a loss of 3 or 4 instead of having made a profit of 3 or 4. So the process was scan the market for stocks that are gaining, drop them into my TradeStation window that has these special indicators that I have created. One's called an action candle, and let it calculate for action candles and then make the trade when I have an action candle from a predictive chart pattern. The key ingredient here is my action candle. That is an indicator that I created a few years ago, and it's an indicator that I share with my students, and it really allows us to watch, you know, 1,000 stocks at once, looking for stocks that are making abnormal moves very early in their move, so you can catch them before most people catch them. We always want to stay ahead of the investing public, and so I just stuck with that for the 4-to-1 trade. All right, so that is the process for swing trading. Now I want to show you the process for day trading. It's very similar, a little bit different though. So we run the same scan, the gainer scan. So I'll run that again. And when we're day trading, we want stocks that are fairly liquid. So we're going to copy all these stocks and paste them into this window, which calculates the number of trades for that stock at any one on any day. So you can see here the VXX traded 314,675 times today. The reason I do this is I want to sort the market by number of trades, because I only want to trade liquid stocks when I'm day trading. I want to be able to move in and out of them fairly easily. I want stocks that have a tight spread between the bid and the ask. And a stock like, you know, something down at the bottom of the list here, when you look at the chart, you will see that it just doesn't have the same flow. It'll look kind of chunky and that sort of thing. So see this chart here? See how the chart doesn't look smooth? That's because the stock isn't very liquid. Now compare that with Microsoft, and which is a very liquid stock, and you will see that the chart is very smooth and has a good flow to it. And the spread between the bid and the ask is very tight. It's always about a penny. So that's the kind of stock I want to day trade. Now when I'm day trading, I'm not looking at 13-minute charts, I want to look at 2-minute charts. So I just quickly change my time frame to 2-minute, and now you can see what happened every 2 minutes over the course of the last 2 days on Microsoft. Having said that, I don't want to trade Microsoft today. Microsoft is normal today. I only want to trade abnormal stocks because they're the ones that are making the moves. Well, how do I find the abnormal stocks? Here's how I do it. I'm going to grab the most liquid stocks in my screen here. So I'm going to grab the stocks that have traded at least 10,000 times today, and I'm going to paste them into this window, which calculates whether the volume of stock traded today is abnormal. And there's a number here, and again, this is my own indicator. This is not something that comes with TradeStation. This is not something you can get anywhere else. It's my own little concoction that looks for statistically significant abnormal volume. I'm going to sort the market by that indicator so that I can see that MWA, Mueller Water Products, was the stock trading with the most abnormal volume today. And when this 2-minute chart comes up, you will see how the volume today really stands out compared to yesterday. So there's the chart for MWA. This is yesterday over here, and this is today. And you can see that the volume today is a lot higher than the volume was yesterday. So this stock was in the news, okay? I don't know if they announced earnings or what it is. I don't care. I don't read news releases. I don't care what companies say. I only care what the market thinks about it. And I can get what the market thinks about it by looking at the chart. All right. So in this case, it met the criteria of 2 of my trading strategies. One is called a worm strategy. And so on the worm, we would have had our buy point right here. But on a risk-reward basis, that returned about a 0.5 reward. The other strategy that it met was something called an intraday pullback strategy, which it met right there. And in that case, it earned a 1.5. So that means that if you risked $1,000 by the end of the day, it had earned about $1,500. All right. Today wasn't a great day for trading because the market sold off pretty sharply. And again, as I said, I was more focused on the VIX. Let's pull up a chart of the VIX, because that's sort of what was hot today. And the VIX, I mean, again, I bought it on Thursday last week, but it came alive right here just a little after 1:30. You can see all of a sudden the volume jumped up. So remember, I'm doing this process that I showed you all day, every 10 minutes or so looking for new stocks that are abnormal. And when you get that burst of abnormality late in the day, for some reason there's something going on, that makes me want to jump on top of that. Okay, so that's the process. Let me just sort of summarize the comparison. If you are going to be a little bit more of a passive swing trader, then I recommend you use stockscores.com with the market scan tool and focus on a 30-minute interval. If you can be more active, then you want to use TradeStation with my indicators. It will help you find these fast-moving stocks early in their trend, but it takes more dedication. You have more overhead because TradeStation costs some money every month, and you need my indicators to do that. That's what paints these little pink and white dots, and these are all things that are taught in the courses that I do. I'll get to that in just a moment. All right, so that's the process for finding the trades. It's not complicated. It's, like I said earlier, it's not rocket science, but what's key is that there's some pretty sophisticated mathematics going on to find these stocks that are trading abnormally and to find them early in their trend. You know, anyone can read chart patterns, but unless you have that chart in front of you at the right time, you're going to miss it. And the reason I created these indicators is so I don't miss it, so I can catch these things before anyone else does. And you can see, you know, there's lots of chat rooms that follow stocks trading abnormally, but I always beat them to it because I've got the power of a computer to find these things quicker in combination with my indicators. So what are the components of a trading approach? First of all, you need a strategy. You need a set of rules for when to buy, when to sell, how to manage risk. Second, you need some skill, you need to practice. So with my strategies, there's a certain element that is chart reading, and that takes some practice. And I think while you're learning how to do that, it's important to have someone to help you to make sure you're doing it properly. Chart reading is a skill like anything else. It takes some time to learn. Once you learn it, it's extremely powerful. And what I do for my students is teach them how to read charts, but I also give them that support through the process so that when they, you know, think that they've picked the right chart, they can email me and say, did I do this right? And I can give them some feedback and help them learn that skill. Everyone that I teach is always not fussy enough when they start. So it takes some time to be selective enough and to be very particular about what makes a good chart. Second or third, you need a process. So I've shown you my process, and of course when I teach people I have a much more detailed explanation of that process. I've given you sort of the high-level version of it today. You need tools, whether you use tools that are out there in the market, whether you use the stock scores tools, whether you use my tools that I've created for TradeStation. You need something to give you an edge. If you're trading on hunches and trading with what everybody does, you're going to be average. If you want to beat the market, if you want to beat most people, you have to have tools that give you an edge. But even the best tools in the world won't make you a good trader if you don't have emotional control and discipline. Now, the reason people get emotional is because of their emotional attachment to money. And in order to overcome that attachment, you need to have a strategy you believe in. You need to have a written trading plan for what to do. You need to not take more risk than you are comfortable with. If you can't stomach the thought of losing $500 on a trade, then you shouldn't have a position that is so large that you are exposed to a $500 loss. The real thing that's important is that you don't take more risk than you can handle. And for some people that's $100, for some people that's $5,000. Everyone has a different number for their risk tolerance. But if you take more than that, then you're going to make mistakes. Finally, you need capital. Stock market requires that you buy and sell, and if you don't have capital, you can't do it, which is why all of my strategies, everything I teach, revolves around capital preservation. I have a very well-defined process for how you bring up your risk level so that you don't eat into your capital. You know, my approach is to trade on paper until you've earned an RR, or reward for risk, of 10. Once you've earned an RR of 10, then you start trading with a low amount of risk. Maybe it's $50, $100 a trade. Once you've earned 10 on that level, then you can increase your risk. And when you get 10 at that level, then you can increase your risk again. So you ladder into risk so that you're never risking much of your portfolio. And if you do it that way, You can still suffer. There's no doubt that stock trading is risky, but you really do a lot better at controlling your risk that way. And as I said, capital preservation is a key. So how to become a trader? If you've aspired to be a trader, whether you want to be a swing trader or a day trader, what I did is the top part. I taught myself how to read charts. I taught myself how to manage risk. I learned the hard way the importance of maintaining emotional control. I spent over $500,000 of my money developing tools. I spent 20 years developing processes and 25 years developing strategies. You can get all that by putting in 25 years, or you can pay me to teach you my method, and that's really what the Stock Scores Active Trader program is about. I teach about 100 people a year my approach, and it's basically the Stock Scores Active Trader program, which I'll talk about in a moment. Most active trading programs have multiple levels and are fairly complex. I've looked at other companies that teach, and they always say, oh, you know, start with the $300 course, and then you do that, and all of a sudden you got to upgrade to the $3,000 course, and then you got to upgrade to the $7,000 master's program. And I've met people that have spent over $20,000 on education, and they still don't know what the heck they're doing. I don't operate that way. I have one course, well, I have two courses, but one is for investors, one is for active traders, but there's no levels, there's no, you need an upgrade and that sort of thing. Throughout that process, I support my students because there's just no replacement for practice, and when you're practicing, you need someone to bounce your questions off of and that kind of thing. So I don't teach a lot of people because I want to be able to give people that individual attention that they need to learn how to do this properly. So as long as you're willing to ask questions, I'm willing to help you with answers. The Active Trader program is devised as a 12-week program. I have people that do it in 2 weeks. I have people that do it in not 12 years, maybe 12 months. The time that it takes to do that is entirely up to you. But the Active Trader program goes for 12 weeks. Now, what you learn with that is my strategies, my TradeStation indicators. You receive those as well, so those little pink dots on the chart, you get those. My videos, all of my material is covered on video and books that we send you, and then you get 12 weekly assignments. Each assignment has an assignment and an answer, and there's videos for those as well. You get a trading plan, or pardon me, you work on a trading plan, I work with you on that, and throughout the process you get support from me. Here's the cost. Stock Scores Active Trader Home Study course is $3,495. It includes 6 months subscription to Stock Scores. It includes my daily newsletter for 6 months. It includes unlimited email support from me. It includes my TradeStation indicators, all my videos, and there's, I don't know, probably 20 videos in that course material. The books we send you, everything that you need to learn my material. Plus, as you have questions, you can send me those questions and I'll answer them for you. There is a mentorship option for those who don't want to just get email support from me but want to be able to talk to me one-on-one. You do have that option as well. It's a 6-month program, and that course is $7,495. Now, if you have an interest in that, you can go to stockscores.com/learn. Anyone that registers for my course material before the end of the week is going to get a bonus. They're going to get a 1-hour one-on-one Skype session with me once they've gone through the course material, where I will show you the strategies that I think are right for you. We'll have a little 1-hour conversation on Skype. The reason I use Skype is I can show people my screen. So once you've gone through all the books and the videos and you have a pretty good understanding of things, we book a time, and I'll spend about an hour just in a discussion with you, making sure you understand everything, talking about the strategy that I think is right for you. We'll walk through the processes one-on-one. That's a bonus that you'll get for anyone that registers for the Active Trader course before the end of the week. Now, if you have any questions, my email address is on screen, tylerb@stockscores.com. If you go to that stockscores.com/learn page, there are some videos on there which give you a little bit more information on the course material, and you can also register for the course right there online. Once you're registered, we get your account set up on Stock Scores, and we'll start sending you all of your material. There's quite a bit that we have to send out to you. There's a few questions that have come up, so I'll try and answer those now. Someone is asking if there's a monthly subscription fee for the action candle. No, there is not. So when you buy my Active Trader course, you get that indicator, and the only thing is that you have to have TradeStation. So and TradeStation may have a monthly fee if you don't have an account with them. So if you have a brokerage account with TradeStation, you can use it for free. If you don't have a brokerage account, and again, Canadians cannot get a brokerage account with TradeStation, so then you got to pay TradeStation every month. But that's not for me. Will TradeStation run on a Mac? It doesn't run on a Mac, but it runs on Windows on a Mac. So if I have a Mac laptop, and I've installed Parallels, which gives me the ability to run Windows on my Mac, and that's how I run TradeStation on my Mac laptop. Someone is asking, oh, he left already, so I'll answer that question. Do news releases determine if I buy stock? Not at all. I don't look at news at all. I think that's about it for questions. I don't see anything else here that I haven't covered already. And certainly if you have any other questions, you can email me. I'm happy to answer any questions tomorrow, what have you. But there is that bonus if by Friday you register for the Active Trader course. I'm going to give you 1 hour of one-on-one coaching once you've gone through all the material. Any other questions? I did record this video, so I will try and get that video uploaded and send you all the link to it probably tomorrow. It takes a little while to create the video and upload it, so I expect you'll get an email from me tomorrow on that. I don't see any other questions. I'll maybe wait 1 more minute here and see if anything else comes in. And again, my email address is right here, tylerb@stockscores.com. And you can go to the stockscores.com/learn page and see what you need to see there. All right, I haven't had any more questions come in, so I'm going to wrap up this presentation. I want to thank you all for joining me today. I will send out a video link for this as soon as I can get it done. I hope you enjoy the weather wherever you are. It's certainly beautiful here in Kelowna, BC. And have a great rest of the week. And as I always like to say, trade well.